Your idea is amazing, your clients are happy, and your bookings are full, but things still aren't adding up. Maybe your prices don't cover quiet months. Maybe one client is bringing in half of your income. Or maybe you're wasting your time on marketing tactics that don't bring customers. Trust me, it is cheaper to have a blueprint to follow than to spend months of trial and error to find the issue. Your business plan removes the guesswork, and in this video we will guide you through creating a plan which is tailored to grow in your business. Hey there, I'm Svetlana from Piri, and we make digital marketing simple for small businesses. Business plans have a reputation problem. Say the words out loud and people picture a startup founder standing in front of the investors on Dragon's Den or Shark Tank if you're in the States. In reality, small local businesses need a business plan just as much as tech startups do. It simply needs to look a little different. By the end of this video, you will know exactly what goes into a small business plan, what order to write it in, and why each section matters. And rather than keeping it all theoretical, we will build a business plan for Maya, a coach who helps brand new managers. There is also a free template linked below, so you can fill it in as we go. Let's start. First and foremost, decide who the plan is for. A business plan you use to guide your own decisions can be short, practical, and straight to the point. That's the type we are focusing on today. If you are applying for funding, your bank or another organization may ask you to follow a specific format and provide much more detail, especially around the numbers. You can still use this video as a general guide. Just make sure you check the exact requirements before submitting your plan anywhere. Then collect your raw material. Your idea in plain language, what you sell, who to, what problem it solves, why someone picks you over the alternative. If you can't explain it to a stranger waiting for a bus, simplify it further. Then customer research, real conversations, reviews, forum threads, whatever people are actually typing into Google. 3. Competitor research. Direct competitors doing exactly what you do, and indirect ones, the DIY route, the free Facebook group, or doing nothing at all. Know their pricing and where they are leaving gaps. 4. Rough financials. Startup costs, fixed monthly costs, your prices, and whatever savings or funding you're working with. 5. Your actual goals in plain numbers. So now we can start writing. Section 1. Business overview and goals. The job of this section is to explain your business in plain English. What do you sell? Who do you help? Where do you work? How do you make money? And what are you aiming to achieve over the next 12 months? Maya's version could read like this. Maya provides online coaching for first-time managers delivered through one-to-one sessions and small groups. Her year one target is £54,000 in revenue. Notice how specific that is: a number, a date, a way to check in and know if she's on track. Section 2. Founder experience. Here we cover the founder and the team. Keep the experience that matters for this business: qualifications, industry knowledge, useful contacts, past results, and just as important, the gaps and how you will cover them. Maya has 8 years of management experience, an ILM Level 5 coaching qualification, and more than 40 contacts working in HR. This matters because she understands the problem, has training to support the work, and already knows people who could buy or recommend it. Should also name the gaps. She might need an accountant for tax and bookkeeping, and a freelance designer to help with the website and workbook materials. Naming a sensible gap makes the plan more credible. Claiming you can personally do finance, sales, design, legal work, and tech support all before lunch has the opposite effect. Section 3. Target customer. A business plan gets shaky very quickly when the target customer is anyone who needs help. Imagine your ideal customer. What problems do they have? How they're solving them right now? What triggers them to seek help? And where they go looking for information? Maya's target customer is a first-time manager, 6 to 18 months into the role, at a company with somewhere between 20 and 250 employees. They're struggling with delegation, dreading difficult conversations, searching LinkedIn and Google late at night. They often have an unused training budget, which means they can afford Maya's services. For your own case, separate the broad market, everyone who could theoretically use your service someday, and focus on a particular type of client you're going after first. Section 4. Market and competitor analysis. Now look outside your own business. You need to know how customers solve their problem today, who else sells something similar, and where there may be room for you. Maya's competition includes generalist business coaches, big corporate training firms, internal company programs, and generic leadership courses. Her edge is laser focus on first-time managers specifically. A simple competitor table helps here. List each one's audience, main offer, price, marketing channels, strengths and gaps side by side. Seeing it on one page makes the gap obvious. Section 5, Services and Pricing. Next, explain exactly what customers can buy from you. List your main services or packages, how you deliver them, what each one costs, and roughly how much profit you expect to make. Maya offers 3 services: a 6-session one-to-one coaching package, a group program for new managers, and corporate workshops sold directly to HR teams. The next step is working out what to charge. Your price needs to cover much more than the time you spend delivering the service. It also needs to pay for preparation, follow-up, software, marketing, admin, tax, and the occasional client who reschedules 4 times. Start by looking at what similar businesses charge, what your customers can realistically afford, and how much it costs you to provide the service. Then check whether the numbers still work at a sales volume you can realistically manage. A price may look good on paper, but if you need to work 70 hours a week to make the business profitable, it isn't the right price. Section 6, Marketing and Sales Plan. This is the bridge from a stranger who has never heard of you to a client who has paid you. Marketing builds the trust, and sales converts it. Map your channels, your core message, how you generate leads, what happens the moment someone inquires, your follow-up process, and how you will ask for referrals. Maya's route could look like this. A first-time manager sees one of her LinkedIn posts. They download her free guide on handling difficult conversations. A short email sequence invites them to a discovery call. They book the coaching package or pass Maya's details to HR. She will support that route with HR partnerships and referrals from past clients. Every piece nudges someone one step closer to booking her services. Section 7, Operations and Delivery. Here we answer the practical questions. Where will you work? Which tools will you use? How will customers book and pay? Who handles admin? What happens when you're ill? How much can you deliver? And be honest about the last part. 6 client sessions a day looks fine on paper until you remember you also need to prep, invoice, and occasionally eat lunch. Maya works from a home office and runs her sessions on Zoom. She plans to spend 15 hours a week working directly with clients, with separate time set aside for preparation, sales, and admin work. If her sales forecast requires 28 client-facing hours a week, but she can realistically manage only 15, the spreadsheet has caught a problem before it becomes a real one. That's the beauty of a business plan. It helps you spot what doesn't end up while you still have time to fix it. Which brings us to Section 8, Risk Planning. Every business has weak spots. Lower demand than expected, leaning too hard on one marketing channel, cash flow gaps, getting sick. Maya relies heavily on LinkedIn for visibility and uses only one HR contact for company referrals. So she adds safeguards, builds an email list, reaches out to more of her HR contacts to build relationships, and asks happy clients for referrals. For each risk that actually applies to you, know the likelihood, the impact, the warning signs, and your backup plan. Section 9, Financial Forecast and Funding. This is the section most people put off until last because once the numbers appear, the business suddenly feels very real. Make it easier by breaking the forecast into smaller parts. Startup costs. What will you need to pay before you launch? Running costs. What will we spend each month on things such as software, insurance, rent, marketing, payment fees, and contractors? Sales forecast. How many packages, appointments of product do you realistically expect to sell? Cash flow. When will money enter and leave your bank account? And break-even point. How much do you need to sell before the business covers its costs? Funding. Do you need money to get started? If so, how much? What will you spend it on? And how will that investment help the business generate sales? Remember that profit and cash don't always move at the same pace. Your business can look profitable on paper and still run short of money while you're waiting for customers to pay their invoices. Maya's year one sales target is £54,000. To reach it, she plans to sell 68 one-to-one coaching packages at £450, bringing £30,600. 3 group programs, each with 8 participants paying £600, bringing in £14,400. 6 corporate workshops at £1,500, bringing in £9,000. Together, that gives her projected sales of £54,000. That keeps Maya comfortably below her limit of 15 client-facing hours a week. Now, Maya needs to list all her costs so she can calculate her break-even point and how much she needs to sell before the business starts making a profit. Maya's software and marketing cost is around $280 a month. She also budgets $150 a month for an accountant, an average $250 a month for help from a freelance designer, $50 for insurance, and another $100 for payment fees and general admin. Altogether, her business costs come to just under $10,000 a year. With projected sales at $54,000, that leaves Maya with $44,000 in profit before tax. Finally, section 10, which is the first page anyone reads and the very last thing you write, the executive summary. What the business does, who it serves, what makes it different, the model, the main goals, and the key numbers. For Maya, the summary would say that she runs an online coaching business for first-time managers, has 8 years of management experience and ILM Level 5 qualification, and plans to reach $54,000 in year 1 sales through coaching packages, group work, and corporate workshops. It would also mention her route to customers through LinkedIn, a free guide, HR partnerships, and referrals, plus the main numbers from her forecast. Keep your executive summary to roughly 1 page. Someone should be able to read only this and understand the whole business. That's it, 10 sections. Start with the business overview, work through the evidence and the numbers, write the executive summary last. Keep it handy and update as things evolve. You can download our free business plan template below and use Maya's example as a guidance while you fill it in. If you want a whole marketing system built specifically for your business, head to puri.io. You will get a tailored marketing plan and action steps so you know what to do every week to reach your marketing goals. If this was helpful, give us a thumbs up and subscribe for more marketing tips from Puri. That's it for today. Thanks for being here, and I'll see you in the next one. Take care.